Okay, now as usually we're going to start doing the first thing we're going to look at is basically the indices, and we're going to look at the strongest of them, and we're going to look at the weakest of them, and we're going in order to identify strength or weakness. And because of the volatility that's been happening the last few days, we're actually going to go to a bigger time frame today. We're going to be looking mostly at the monthly charts in addition to the weekly, because these are, as you have also seen, monumental moves, very big moves. So we're going to start with the dollar, which is again the granddaddy of all. And you can see on the monthly index, we have broken below the 75.96 level, and which is the low that we had in December 2009. And we have traded this month, or last few days, to the low of 75.79, and we came back and we closed at above the 75.97. So we came back to this specific point, which, I'm going to put it for you here. To the 92.5. Closing at this at 97 instead of 92, it's like talking semantics. It's just sitting there. So this tells us two things. One, when it broke below the 75.90, now we did not get the capitulation. Now we are okay, guys, could you hold on one Gallup, Mike? There are some people having difficulty getting into the room. Can you assist them, please? It's Dean Field. If you don't have the emails, let me know. I'll forward them to you. Bill Hanu. Okay. Coming back above this, we should have, with all the volatility that took place in the last few days, breaking below here, breaking below the 75.92, we should have had really major capitulation and a test of the all-time low for the dollar index. This is the lowest price the dollar index has reached, which is the 75.30. We can still test it. We can still expect that this thing might go down there. So this gives us a very easy selling point, if you will, or a very easy entry. We are only 5 or 6 pips above our selling point. So right now we are kind of neutral for the dollar. But if it trades below 75.92 based on the index, we are going to be sellers. And that would be a low risk selling point, because we're risking about 5 or 6 pips on the trade. Okay? The other currency we're going to look at, they are all quite interesting. If you look now at the Australian dollar, you can see with the weakness of the dollar that we had in the dollar index, that weakness is also matched by weakness in the Australian dollar. Yes, we have kind of came back off the lows, and we might have a short-term buy signal, if you will, but this is still weak because it has been trying to trade above the par, and it has been failing thus far. So we can say that closing below the 98.56 on the Australian dollar, and that was the low that we had. If you see that the low of the prior week was 98.54, you could see that again it's very similar to the US dollar. If it trades below 54, we have a good selling point on the Aussie. If it holds like this, it is again kind of neutral for the Australian dollar. So we have the dollar and the Australian dollar, both dollars are neutral and very close to a selling point. The Canadian, and I'm keeping the other ones to the for a reason, to the end for a reason, but you can also see that the CAD has turned around and we have a definite now short-term sell signal on the Canadian dollar. And we can expect some continuous weakness. Now we come to some other interesting pairs. I'm leaving the yen to the end. If you look at the Swiss franc, look at this. This is quite a monumental move. This is a very serious breakout to the upside, and this is the highest the Swiss franc has ever reached. That's an all-time high. I mean, if I put the monthly chart, this is the highest ever that the Swiss franc has ever reached. I mean, this I'm looking at 50 years back, and this is from the beginning of when they had. This is the highest it has ever reached, and of course, by the same token, this is the lowest that the dollar has ever reached. I mean, look at this. The dollar back in the 80s was trading at 150. The index right now we're trading at the lowest level. We are 2 points away from a structural breakdown to the downside. So you can see now the difference between the Swiss and the US dollar. So the Swiss now is at an all-time breakout. Again, it's extremely bullish. We do not have any sell signal on the Swiss, but these kind of explosive move when something goes above a 52-week high, or when they tell you a 52-week high, or a yearly, a 2-year high, you're looking at a 52-year high, not just a 50-week high or a 52-day high. This is a 52-year high. What that would mean is either now it will be something, if we are very long-term speculators or we are long-term players in this market, we want to be holding the Swiss as long as it's above the 107.62. If we are not that longer term, well, we need to be looking at the action of the Swiss National Bank, because this kind of action is quite detrimental to the economy. Anything now that's going to be exported out of Switzerland is going to be extremely expensive, and it is cheaper to buy a similar product either from Germany or from the UK or wherever, but Swiss now stuff is going to be extremely expensive. If we look now at the euro, you can see quite an interesting chart. The euro now has, I'm putting it without any lines so that you can see it, it has broken to the upside. We have a structural point over here, a very important structural point, which is the 140.55 on the index, and we have closed this week at 141. So right now we have a breakout to the upside on the euro, and the strongest currency that we have seen so far in this grouping is the Swiss franc. The second strongest is the euro. The dollar, the US dollar, is kind of neutral, and we're sitting on a selling point. the Australian dollar is also neutral and sitting at a selling point. The Swiss is the strongest. It is followed by the euro. Now, if you look at the British pound, this is still in a major downtrend. Unless it gets above the 170, we are still in a downtrend. And we have now a short-term sell signal, or at least we don't have a buy signal. We have a neutral to buy on the dollar, a neutral to buy or a neutral to sell on the Aussie. This is actually a selling point. The pound is fairly weak. And last but not least is the Japanese yen. This is the monthly chart, guys. And what we had here, we had an explosive move to the upside, and this is quite a unique pattern, because these kinds of moves are, they, like this, for example, what you see here, this is the same move. I mean, I just broke it down to a weekly chart. This explosive move should have led to a continuation way to the upside, but having a range of last week putting a high of 129.57 on the index, to turn around and the low of the index was 121.30, and to close the week at 123.56, you have now an 800 basis point range for the week. And of course, we are now, as you can see, guys, we are closer to the lows than we are to the highs, and we can see this big tail up there. That is an extremely negative pattern. Closing below, that by itself is a sell signal. Closing below the 125 handle is a double negative, and closing below the 123.68 is a further negative. So even though the picture to be is in the dollar, in the yen, is to the upside, but we have actually more than 4 major sell signals on the yen, and we are not, or we should not be looking to be buyers of the yen as a whole unless it trades above at least the 124.85 handle. We're going to take that down to the individual pairs later on. But now what we are going to be focusing on this week, the strongest currency that we have now is the Swiss and the euro. So these are the ones I'll be looking at buying. The neutral ones, I'm going to put them plus or minus. I mean, the kind of neutral. These would be the US dollar and the Aussie dollar. But I would be, my first priority or my first look would be towards the US dollar. Slightly negative, if you will, is the, I'll put the first one slightly negative, is the British pound. The negative ones are the Canadian dollar and what, guys? Which one? The Japanese yen, absolutely. And the Japanese yen, these will be the Canadian and the yen. We will be primarily looking at them, exactly. So we are focusing now on the yen. So after this, we're going to be looking at, for example, in this case, looking at buying the Euro yen, the dollar yen, the Aussie yen, then the pound yen. We can look maybe at the CAD yen, but these are our choices first: the dollar, the euro yen, the pound yen, and the euro yen, the Swiss yen, and the dollar yen, the Aussie yen, then the pound yen. If you want to be in the majors, as I told you, the dollar, we might. This is a 52-week high on the Swissy. So we are going to look for signs of maybe interventions. Absolutely, yes. You just have to subscribe to the exchange. This is the Chicago Mercantile Exchange. You just have to subscribe to the data. Okay? And then we can be looking at buying the euro dollar, the euro CAD. I mean, look at this. I can take the euro CAD because the euro is very strong. The CAD is on the weak side. I can take the euro CAD. I can take the euro pound. I can take the euro yen. I can also take the Aussie CAD. I can take the Aussie yen. The Swissy, it is too strong for its health, if you will. So we are going to be taking the Swiss long. We don't put a pennies. We're going to be taking the Swiss long as soon as we make sure that we have a continuation. We're not getting a reverse. Okay? So this is the hierarchy that we are going to be trading. We'll be looking at buying the euro yen, the euro CAD, the euro pound, the euro dollar. We'll be looking at buying the dollar yen, the dollar pound, maybe the dollar Aussie. We will be looking at, if the Swiss fails or I have a sell signal of the Swiss, I'll be looking at buying the dollar Swiss. And buying the dollar Swiss is a short-term move rather than a long-term move. Okay? That is the hierarchy of the index. So while I'm stopping this, yes, you can take the Swiss yen, but we're going to do the Swiss yen separate. Again, the Swiss yen, as I said, when you have something that's moving explosively like the Swiss, this is the rule. I'm sorry, I can't. I would like you guys to please write your full name when you enter, so at least I can address you properly. Because now I don't know how to pronounce your name. If you look at the Swiss, when you see something like this, guys, whenever you look at the chart and the answer of which way you're going to trade is so extremely obvious, like this, that is a no-brainer that you want to be buying the Swiss. When you see something like that, that it is a no-brainer, it is such an easy thing that you have to do is actually to buy it, you just jump in, it's a no-brainer. This is the time that you have to realize that there is a chance that you are too late to the party and you need further. This is the time when you look for confirmations in order to trade into that direction. When the decision is so easy that you want, anybody that looks at the chart totally agrees 100%, it's a no-brainer to buy. When that's the case, I'm not going to say no. All what I'm going to say is, prove it to me. Give me the confirmations. I'm going to put rules. I'm going to enter price points. And if it trades above these price points, and if it stays above these price points, I'm going to continue and buy. If it doesn't, then I'm looking to go the other way. All right? So let me stop the recording and then